Good afternoon and welcome to this weekly market update from MRC Markets. Today is the 20th of July 2012. What we'll be doing today is going through Euro-dollar cable, dollar yen, dollar Swiss and gold. Basically kind of just going through the charts and just reviewing what's happened this week really and what to expect next week. We normally do these videos slightly earlier in the week, but I'm doing it on a Friday today, so I thought I'd just review the markets and then I can give a sort of full weekly sort of outlook for next week. We're not going to make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. For any new followers, we do have 3 moving averages in each of these charts. The red one is 55 simple, the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at Euro-dollar. If you flip it to the weekly, it's just pure selling off at the minute, miles away from moving averages. The only area of interest really to the downside, it has to be the 2010 low, which stands at around the 1.18 area. So that looks like it's still in play, and it's definitely the sort of target for the sort of long-term sellers in the market. Is that 118 level. Looks like it wants to take it out. Last week's candle, nothing much really in terms of the candle, in terms of huge interest. It's not quite a reversal, it's not a bearish candle either, it's not a continuation, it's just basically pretty much a doji candle, although there was there is some sort of body in that candle, so it's not quite a doji. But it shows a bit of indecision in the market, and I think that's pretty much summed up this week really. This week's candle is pretty much identical, and it's just been pretty much choppy throughout the week, Monday to Friday, just no sort of clear direction in the market. And you can see this if you flip it to the shorter term chart. I mean, if you just look at the daily chart, pretty much all this week it's just been in a tight sort of range, between sort of 123 handle and sort of you pretty much call it 122, 123. It's pretty much been ranging just over 100 sort of pips. It's been ranging so far. So not easy for traders, especially trying to pick tops and bottoms, because it's just pretty much chopping, and it's not really like a kind of a flat chop either. Some would say that it is a bear flag. You can see we're currently getting some pressure on the current 4-hour candle, but a lot of people will be having this sort of bear flag on their charts, and it does like we are breaking, so find some direction in the market, which is happening on the Friday. So often that we do see this happen. So looks like the sellers have come back into play and they want to take out that 118. So I mean, in terms of next week, it's all about where does this where is the daily candle going to close? If we kind of close below the current lows, then we're in free-for-all mode, and that 118 it should most probably be taken out. But you can see the sort of last few days daily candles, they've all had a decent amount of lower wick on them, suggesting that we're going to grind more to the upside, but that's looking quite weak now, and you can see that we didn't really get any sort of push towards the upside. It's literally just been choppy throughout the week, but the buyers have come back into the market and try to push the price back up, but it looks like they're failing miserably, especially today. So looks like we're going to get these lows taken out on the Euro-dollar chart. But yeah, nothing much of interest really in terms of the sort of daily charts, because we're still miles away from the 55-day. We said last week that if we can get some sort of bounce up, then the 55-day moving average will be the one that you want to look out for any potential selling opportunities. But the buyers in the euro just aren't that strong at the minute, and this is very, very evident, especially this week. It's pretty much summed up the current buyers in the market, very weak. I mean, they've been pretty much having the 1 sort of 22 as the sort of cushion in the market for any sort of bounces towards the upside, but there's just been no sustained hold above 123. So no, it will be an interesting week next week, but it's all about where we close today. I mean, the buyers could come up off this 1 sort of 22 cushion and bring it back up, but it is looking quite likely. But it's still well early in the day, so it's all about the close later on tonight at 9 o'clock. Okay, let's have a look at cable. Cable's a very, very different chart. Normally euro dollar and cable do a very similar thing, but they've just been doing a complete opposite this week. This will be evident in the euro sterling chart, which is just absolutely flying down at the minute. Cable's much more bullish, and this has been evident this week. What we spoke about the last sort of few weeks is this 200-day moving average, which has been capping very, very nicely, and also the fib from the lows, from the highs up there to the lows, and we were speaking about the 50% level. We said, because this is quite a big fib move, which a lot of the sort of long-term players will be looking at, and we said, look out for the 50% or the 200-day if we get any bounce towards the upside. And surprise, we got this currently holding at the 200-day moving average, and this is pretty much as we speak. Yesterday, it tested it and closed below, and you can see today we're already starting to sell off. But this week it has been grinding nice. It has been grinding very, very well. If you flip it to a lower time frame, the 4 hour or even the 1 hour, we've just been, this week it's just been a pure sort of uptrend, but it does look like it is starting to break down. That's the official uptrend there on the 1 hour chart, and we are starting to break down now. So the 1 hour chart, you can look for the 55 hour moving average there to see if that holds, but it is looking like it wants to sell off and have some sort of healthy retracement. If you do get some sort of healthy retracement, you're looking for buying opportunities, then you can draw the fibs from the low on that 1 hour chart to the highs and see if we come down towards the 50% for a sort of healthy retracement. The 200 hour moving average is around 1.5577. Let's flip it to dollar yen. We haven't spoken about this chart for a while, mainly because it has been of huge interest. On this daily chart, only thing really interesting is this trendline support around here. Looks like it wants to come down and test this. We also spoke about the trendline resistance as well, and that was holding very nicely indeed. So pretty much just playing in this sort of triangle formation at the minute. We're below all the moving averages now, so it's all about what happens at this trendline support. It's pretty much just been grinding down all week. Although yesterday's daily candle was quite bullish, some would say that is a reversal, but it's not quite a green body. So the support you'd want to look at is pretty much the 78 handle. That's the key sort of focus of support there. A lot of people will be looking at that level. It reacted very nicely around there at the start of June, end of May, and if we come down to that, that'll be the key level to look out for, that 78 handle. On dollar Swiss, as we've been saying the last sort of few weeks, it's been correlating to euro dollar completely. It's basically just been mirroring whatever euro dollar's been doing. So if euro dollar's been going down, then dollar Swiss has been going up. I've been looking at this fib recently, actually, from the lows on the 4 hour to the high, and if you flip on the 23.6 fib, not one that I look at too often, but I was just looking at why we had some sort of a bounce at a certain level, and it's around there, and that also coincides with that high around there on the left. Can you see that? Key support there around 97.67. We're now bouncing up on that very strongly indeed. A lot of momentum up there. So if we take out these highs up here, the 98.72 highs, and the next level we'll be looking at is the 123.6 extension, which comes out at 0.9979. What I've been saying about the correlation is that if you look at dollar Swiss, as soon as dollar Swiss has been going up, you flip it to the euro dollar chart, it's just been doing the complete opposite. You can see euro dollar's now breaking down, and dollar Swiss is breaking towards the upside. So it's literally just doing the complete opposite thing. But no, it's looking very aggressive, dollar Swiss, and the next level to look out for will be that 98.72 level. But no, very similar to euro dollar this week. It's just been chopping. Instead of that trendline support that we had on euro dollar, we had a trendline resistance on dollar Swiss, and that now looks like we've got a solid 1 hour close above that now. So it looks like it's going to fly towards the upside in that 98.72 level. Okay, that's all Forex time. Let's have a look at everyone's favourite commodity, gold. What we've been speaking about for the last sort of few weeks is 1560s level. Still failed to have a weekly candlestick close below that level. Last week's candle did pierce it and bounce back up and form a hammer candle, which would be indicating some sort of reversal pattern, but it has been struggling to go towards the upside this week, and it's pretty much forming a similar sort of candle, but it is a slight red body at the minute, but no sort of conviction towards the upside on gold. It's the same old story I've been speaking about the last sort of few weeks. You can see last sort of 1, 2, 3, 4, 5, 6, 7, 8, not pretty much 10 weeks. Last 10 weeks it's just been chopping between the sort of the 1540s we got there and 1630. We haven't had a daily candlestick close either side of that 90 sort of dollar range. One thing I would look out for though, instead of looking for a sort of horizontal range, you can draw a trend line support there and a trend line resistance there, and that sort of, to me it just looks easier on the eye. It's easier in terms of, I mean, looking for buying opportunities. You could have bought off a nice sort of reversal candle there, a sort of bearish engulfing there. You could have sold on there, but a much easier way to play it. But you can see we had the 55-day moving average here just slicing between the candles currently, and that's the sort of key indicator. If we get a real sort of clear close above that, then we could break above this trend line resistance. But we also have the 100-day moving average there as well, which is pretty much coinciding with that trend line resistance. So if we're going to break towards the upside, then we need a clear candlestick close above that 100-day moving average, which coincides that that trend line resistance. And of course, if we're going to see any sort of downside pressure, then we need a daily candlestick close below this trend line support, and also preferably, if we're going to get some real momentum, then we need a weekly candlestick close below that 1560s level. Okay, that's all for today. I hope you enjoyed this video, and I'll catch you next week, maybe on Monday, and we'll have a look through the economic calendar as well, and look out for what we expect to see coming in the week. Hope you enjoyed this video. Take care. Thank you.